board, proposed by Cigna. He has included option that includes an 8.8 increase in the plan, and has and told us that that's what he has implemented or put into the budget that he recommended to us. Discussion among the board.
Just a quick question, Mr. Adams. You had talked a little bit about a consultant for next year possibly coming in and individualizing some of these plans in the future. Is that? Could you just elaborate on that?
Yes, sir. A couple things to note too before I jump to your question, if you don't mind, Commissioner. Just a reminder to the public that didn't have the opportunity to be here on Friday when the budget message was presented, was that the original quote from Cigna was, in order to maintain benefits as is, was a 19% increase. So although the 8.8% is an increase to the county budget, it is also cut benefits, more than half, as far as half of the proposed increase. As far as your question, Commissioner Smith, proposed in the budget message to this board, I have requested $2,000 above and beyond this, which is included in this, the overall request, to go out and help us find a brokerage consulting firm. The employees have requested they are looking to start meeting the department heads come August, and to start dealing with these issues now versus waiting towards the end of the fiscal year. I think it's important for them to have access to the expertise that I think is necessary to start going through all the alternatives. One of the things I'm going to somewhat repeat myself from Friday, just because we have new folks here and things of that nature. Once the Association of County Commissioners basically got out of the health benefits program, we lost a major, I guess, resource, if you want to call it that. Alleghany County doesn't have a human resources officer. We're spending over $1 million a year on insurance. Out of that $1 million a year, the majority of it is towards health benefits. So instead of coming and asking the board for a human resources officer who's trained and this is all that they do is deal with insurance and personnel issues, what I'm asking for is some assistance in trying to get us some professional assistance in regards to looking at alternative plans. The employees and the department heads' goals are basically to look at two things. One is how to mitigate costs for future, because they did recognize that under our current plan, we're just going to keep seeing these dramatic increases, but they also try to look at alternatives to try to maintain benefits as best they can. And quite honestly, the vision that I'm seeing when we bring in the brokerage / consulting firm is what we're actually doing is trying to develop a long-term relationship with this brokerage / consulting firm. Excuse me. And so I think it's going to be eventually a long-term relationship with this firm, because right now we're dealing directly with Cigna, okay? And what I'm looking for is someone to come in and broker not only necessarily Cigna, but potentially our cafeteria plan, and try to make our health package a more consolidated package. We offer a lot of different things, and several of the items the employee can choose themselves. But if we were to bring in a consulting firm, they can consolidate it into one and help an employee have access, or help them or educate the employee for them to make better choices for themselves.
So not necessarily a one size that fits all. It would give them some opportunities to individualize it to what their needs are. Is that
supplemental plans, yes, sir. Because, my experience with insurance, anytime you change health insurance, I don't care what it is. When you start reducing benefits, depending on how you reduce it, it impacts some more than it does others, and that's always dictated by your individual circumstance. So if we were to able to get in and try to get more alternatives for employees who may get impacted more than others when we're having to change these benefits. For example, a medical savings account. For those who know that they're going to spend, X amount of dollars on the deductible, if we have somebody come in and help us create a medical savings account, they can start saving for it, it'll be pre-taxed, and it turns every $7 actually to $10 because you're not getting taxed on it. And it's those types of things that if you can help individualize it for individual, it also can help decrease the burden back to, or the impact to them as far as their benefits.
Okay, thank you.
Yes, sir.
Commissioners, you have before you 5 plans, and let's make sure all of us have an opportunity to ask Don questions before I call for a motion. Any other comments or questions to Don on the 5 plans that we have before us?
I'd just like to look at the recommended 8.8% increase. You know, the original increase would have been a 19%. That would have been to remain, the benefits to remain as they are at present, right? And with the kind of the middle of the road increase, the office copay primary provider goes from 20 to 30.
Correct.
The specialist copay goes from 40 to 60, right?
Correct.
And then dropping down there's a significant change in the deductible from the existing plan to your recommendation. $500 deductible individual to $1,500 individual. For family, $1,500 to $4,500. That's a significant increase. That's all in network. Out of network deductibles go from $1,000 to $3,000 individual, $3,000 to $9,000 family. Out of pocket, $1,250 to $3,500. Out of pocket family, that was individual. From $3,750 to $7,000, it doubles. So there is a significant difference, I guess, and it's not, it kind of depends upon what the individual employee takes advantage of, you know, what they have to do, what they have to use in this plan, I guess, as to how much it would affect each person or each family. But it could be pretty significant.
And it can be something deductible. This is when we start talking about recommended versus what I felt like I could build into the budget.
Right.
The 8.8% is what I was attempting to build into the budget, but the budget I presented to this board also I've recommended that this board needs to find $200,000 too. So, so really when we start looking at, recommendations versus trying to build in and have a certain amount of money into the budget and try to build in as minimal impact as I can, but even at 8.8%, we will have employees that'll get dramatically affected by the deductible. And then some won't. If individuals mainly use just the office copay, then you're talking about $10. If individuals do have a major event, then you're basically talking about $1,000 impact.
We were kind of thrown into this last year at the last moment. The County Commissioners Association decided not to maintain their benefits. We had to scramble to find something. But it would appear too that it will continue to go up year after year after year. This if your recommendation might give us some wiggle room if we're not able to find something better for next year.
As far as trying to get the consultants, because the thing, I've been fortunate in my career to have access to professionals and things of that nature as I've gone to meetings and so forth like that. That's what I'm trying to get the department heads access to, so it's not me sitting there telling them what the trends are. It's a professional person or company that's telling them that. If you look at our increases are due to multiple factors. One is we have had some higher claims this year, but that's not everything that occurred. You know, when we get increases in cost, it not only impacts the county's cost, it impacts families. It impacts, you know, we do have employees that have their children on the plan, we do have employees that have their family on the plan. So what has occurred is as our costs have gone up, we have started losing either children or families. We are concerned this year we may lose a couple more families even at an 8.8% increase. And what that does is that impacts your overall, I don't know how to say it, but your overall average age. And that starts becoming a major issue in regards to when you start looking at our pool and who we're trying to cover. When you look at retirees and employees, you want families on there. You want children on this plan because overall it makes for, it's a formula for insurance companies. Not only does it increase the chances of less deductible and, less payouts for the insurance, but from an insurance standpoint, it literally is a formula that they plug in your average age to. And so what we're running into also, that it's impacting our age, our premiums is as our families are leaving, as our prices have been going up and our children have been leaving. If you take last year, this current plan, Cigna would not offer us an individual child rate. They would only offer us they call a children rate. So if you had 2 or 3 children, that's a pretty good deal. If you had 1 child, it's not a good deal. And that caused us to lose between 8 and 10 children off of our plan this year, which all those impact how insurance companies view us. So when the department heads get together, and when I'm talking about bringing in, when I'm saying a consulting firm, I'm looking for a firm that basically can broker the larger agencies, Cigna's, Blue Cross Blue Shield, also a firm that can do cafeteria plans and things of that nature. What we're looking for is not an average insurance agent. It's someone that has direct experience in municipal and government and has direct experience. We could look into self-funded. You know, self-funded is an option, but you gotta be very disciplined at self-funded options. And so anyways, it's gonna be something that's gonna, I think the department heads are recognizing that it's gonna be discussion every year, and they're just wanting to try to start early.
And our pool keeps shrinking.
I'm just identifying a handful of issues that I think that the department heads and elected officials that start working in August, that they're gonna have to take into consideration when we're trying to develop a plan that saves benefits, but also mitigates increased costs.
I know I'm going off in the weeds a little bit, but with this proposed firm broker, would we look at possibly including our group with a larger group, a larger pool? I know there's a bill that's in the House, I believe it's in the House, which proposed to let local government employees fall under the state insurance, state employees insurance.
Mm-hmm.
Now, it's not been acted on, but obviously we're not the only ones looking at this.
I think, again, this is where we need I need outside help on this, because my opinion on this is not necessarily a positive opinion. And what I mean by that, I don't want to kick ideas to the curb until we've had a chance to explore them, but I think it's going to take things like changes in state legislature, laws like that, for us to be able to access larger pools. Because if you think about us just trying to join Ashe County, well, we need to look at their pool before we decide their pool may be worse off than our pool. I mean, as far as their pool of employees. And you really have to, when you start trying to talk about getting into a larger pool, you really need to be talking about a significantly larger pool. I mean, the safety net of the association was you could have a bad year and see a small increase. You could have a good year and see a small increase. A really horrible year from Alleghany County standpoint barely even moved the pool because they had thousands of employees in there. So when you start talking about trying to get into the safety net of a larger pool, it's not us in another county. You really gotta start talking about multitudes of people. So what you just mentioned, of being able to access maybe the state plan, that could have some interest to it, yes.
But you have to remember that that's been talked about every year. It's been introduced every year, and they actually gave a couple of counties an opportunity on a trial basis. And the instability of the state insurance and the fact that they're facing some major issues also would also be a discussion as to whether we want to do that or not.
Yeah, and yeah, I agree with Ken that whether or not we're going to stay, I guess my whole point is to get the benefit of a pool, it's a lot bigger numbers than I think a lot of people are thinking in terms of doubling 100 to 200 employees. You really need to be in a pool that has a lot of employees. And so that's where I think alternatives of like self-funded, alternatives of trying to take creative ways on how we look at this plan. I think there's a lot of different ways that can be explored that can still maintain benefits, but also mitigate ongoing costs.
Other comments or questions? I would entertain a motion, and our best way to identify these, plan number 1 is 19%, plan number 2 is 12%, plan number 3 is 8.8%, plan number 4 is 14.99%, plan 5 is 11.25. I would entertain a motion identifying them in that order, or however you choose to make the motion.
I would make a motion that we approve the 8.8 or the plan number 3.
And I have a motion. Is there a second to that motion?
I'll second it.
Have a second, discussion? Not, all those in favor of the motion say aye.
Aye.
Those opposed, aye, 4-1. Don, does that take care of that part of it?
Yes, sir.